looking challenging. Bad is getting worse. Interest rates are likely to move higher because crude prices and rupee is suddenly not supportive. How would you characterize the environment?
I think if you go back few years, the macro in India was too good. Like oil prices at $40 was too good, it was not sustainable probably. And the way oil prices have normalized, I think similarly the macro is also normalizing, I would say. Current account deficit of 0.5, 0.7% in India is not sustainable in the near term, but we were there few years back. So it was too good to sustain. I think macros are stabilizing. So I would not worry too much about the macro.
When we saw similar circumstances which were at play when rupee was declining, crude was moving higher, we had challenges of high inflation, high fiscal deficit and high current account deficit. The situation is not that bad yet, but can we reach there?
I don't think so, because see, if you go back to 2000, I think 5-6 years back, the current account deficit was touching 5%, and I don't think we are anywhere close to that. Inflation is clearly under control. Then we used to have inflation which was in high single digits, briefly touching even low double digits as well. So I don't think we are anywhere close to that kind of a situation.
The fear of what the IL&FS issue could do to the debt market, I think, is rattling everyone. To your mind, how realistic are these fears?
See, I think yes, IL&FS is significant, but I don't think it will upset the whole system. And so there is pain there, but I think it is the fixed income papers of IL&FS are very, very widely held. So all the holders will experience some pain, and I don't know what will happen going forward, how resolution will take place. But I don't think it is so large as to upset the entire system.
What about HDFC AMC's positioning in IL&FS?
No, we have had no exposure to IL&FS.
The other challenge is that is liquidity getting tight? Do you think there is a certain big asset liability mismatch within the debt market or within the system?
See, I think NBFCs are differently positioned than banks. And see, on banking is a business where you need to focus on both assets and liabilities. And last few years what has happened, because liquidity was good, wholesale rates were virtually the same as retail cost of funds, NBFCs did extremely well. Wholesale borrowers were not at a disadvantage compared to those who have retail franchise. I think those times are changing for sure. So I think there should be moderation in growth rates going forward. Even margins could come under pressure. And if this happens, I think the equity markets, which have been very positive on this space, I think they will also realize that banking is, you need to focus on both the assets and the liabilities, which they seem to have forgotten over the last few years.
So do you think NBFCs in general, they reached the so-called Humpty Dumpty levels, both in terms of over ownership and also in terms of outperformance, and now this is simple mean reversion?
I think, see, longer term, I mean, I have always felt, and I was kind of wrong for a few years, I have always felt that a bank which has a good solid retail liabilities franchise is integral to a strong financial institution. And I think that will come to play now. So I think this situation where very large banks who no doubt have NPA challenges, they were trading at sharp discounts to the wholesale funded institutions. I think that should correct tomorrow.